Thank you. Jeff Stein with the Washington Post. The polling shows that most Americans feel like we're in a recession. Why have this drawn-out semantic battle? The administration has been on this offensive to define a recession a certain way. Why have this semantic battle, especially when so many Americans feel like they were misled last year, especially given the chance that things could, again, change and we could actually, have a recession by the definitions that you're outlining? Why has this become this battle?
So I agree with you, and I think we should avoid a semantic battle. I've tried to do that in my remarks today. When you say that Americans are very concerned about the economy, I think their biggest concern is with inflation and high prices that they feel they can't afford to put gas in their gas tank, and people are worried about their retirement savings and whether or not they'll have enough to retire. Now, sometimes people use the word recession to refer to that. That's really about inflation. But I think that the discomfort that households feel, it's not because of the job market. Jobs are readily available, and most Americans feel good about their employment prospects. Layoffs have been low. Some may worry that the economy, that the labor market will weaken, but I think the biggest burden that's weighing negatively on household sentiment is inflation, and that's why that is our top priority in terms of addressing that. So when you look at the economy, the official arbiter of what is a recession is going to be the National Bureau of Economic Research. They'll decide it sometime in the future. So I think what we can constructively do is talk about what is the state of the economy. And as I've tried to describe, the labor market remains exceptionally strong. That is not what we see in past episodes that the NBER has labeled to be recession. On the other hand, we do see significant slowdown in growth. That's to be expected given how rapidly the economy grew when it was recovering from the pandemic and all of those job losses, and policy was designed to do that. We should expect to see a slowdown. This economy is at full employment. So we have a slowing economy. We have a whole variety of risks to the outlook that I've tried to enumerate, but we have great strengths in the economy, too. A strong labor market being one strength. Consumer household balance sheets remain generally quite strong. Credit quality is strong. You do not see some significant increase in business bankruptcies, the typical kinds of distress we associated with the word recession. But I agree, we shouldn't just get involved in the semantics. Let's talk about what's going on.
Shepard Smith here. Thanks for watching CNBC on YouTube.